Stock futures slide as tariff threat clouds global markets. U.S. equity futures fell sharply in early trading Tuesday as investors reacted to a renewed wave of geopolitical tension triggered by U.S. President Donald Trump's controversial tariff threats tied to Greenland. Major benchmark futures, including the Dow Jones Industrial Average, S&P 500, and Nasdaq, pointed to a weak open, signaling a significant shift in market sentiment after the Martin Luther King Jr. Day holiday. According to market data, futures contracts indicated declines of up to 1.5% across key indices, reflecting risk-off trading as geopolitical developments overshadowed typical market drivers like corporate earnings or economic data. What sparked the sell-off? Geopolitical tensions over Greenland. The immediate catalyst for the market slump was President Trump's announcement of tariff threats on several allied European nations unless they agree to Washington's demands related to Greenland, an autonomous Danish territory. The proposed tariffs would begin at 10% on imports from the targeted countries starting February 1st and could escalate to as much as 25% by June if no agreement is reached. Targets include Denmark, Norway, Sweden, France, Germany, the UK, the Netherlands, and Finland, all NATO allies that have openly opposed U.S. efforts to influence decisions regarding Greenland. European and global markets reacted negatively to the threat, with major European indices sliding and analysts warning that the dispute could trigger broader trade retaliation and economic spillovers. Global market reaction. Europe and Asia. European stock markets experienced notable sell-offs, with key indexes like the DAX and CAC 40 facing downward pressure as concerns over escalating trade tensions spread. Asian markets followed suit, tracking losses abroad as investors assessed the broader implications of renewed tariff rhetoric on global growth prospects. Commodity and safe haven moves. With stocks under pressure, investors shifted toward traditional safe haven assets. Gold and silver both rose to record highs, reflecting increased risk aversion in financial markets. Currencies like the Swiss franc also strengthened, while the U.S. dollar traded softer against major pairs. Policy and geopolitical dynamics. The tariff announcements are part of a broader campaign by the Trump administration to apply leverage in negotiations over Greenland, a territory of strategic interest due to its location in the Arctic and proximity to Russia and China. Despite mounting tensions, U.S. Treasury Secretary Scott Bessent emphasized at the World Economic Forum that U.S.-Europe relations remain fundamentally strong, even amid disagreements. European leaders, however, have condemned the tariff threats as undermining transatlantic unity and warned of potential economic retaliation, including the activation of trade defense measures. International institutions have echoed these concerns. The International Monetary Fund, IMF, cautioned that escalating trade measures could set off a broader cycle of retaliation, potentially amplifying weaknesses in global growth and financial markets. Investor outlook and broader implications. According to market reports, the reaction was driven less by economic fundamentals and more by policy uncertainty and geopolitical risk. Traders cited the resurgence of trade conflict fears as a dominant factor behind the sell-off, outweighing optimism from recent corporate earnings and macroeconomic indicators. Analysts note that even the anticipation of tariffs and potential European countermeasures has been enough to weaken risk assets and heighten volatility across equity, commodity, and currency markets. In this heightened risk environment, many portfolio managers and traders are watching closely for further political developments, Supreme Court rulings on trade authority, and upcoming earnings releases, all of which could compound volatility in the near term. Conclusion. The early trading session's downturn in U.S. stock futures reflects deepening investor caution as geopolitical tensions spill back into global financial markets. What began as a diplomatic dispute over a remote Arctic territory now carries the potential to reshape risk sentiment worldwide, underscoring the powerful influence of political developments on financial markets in 2026.